Hello everyone, I'm Colin Zhang Rujing, an analyst at TrendForce. Today, I'd like to share some insights on global energy storage deployment trends in 2025. My presentation today will be divided into two main parts. First, a general overview of global demand for installed energy storage capacity, focusing on installed capacity in key regional markets and specific application scenarios. The second part is an analysis of deployment, demand, and core drivers in four major regional markets and key countries. Let's first look at the global energy storage deployment landscape. First of all, from 2021 to 2023, total global electrochemical installed energy storage capacity surged from 22.3 gigawatt hours to 113 gigawatt hours, with a compound annual growth rate of 72%, showing a strong upward trajectory. Secondly, we forecast that in 2025, newly added global energy storage capacity will reach 82 gigawatt, 216 gigawatt hours, representing year-on-year growth of 28% and 36% respectively. Although growth will slow somewhat with the increasing penetration of utility-scale and commercial industrial storage, average storage duration is expected to rise slightly from 2.5 hours in 2024 to 2.6 hours in 2025. And thirdly, from a regional perspective, Asia-Pacific, Europe, and the Americas will maintain stable shares, while the Middle East and Africa will see steady growth. Now let's turn to deployment trends in major markets. As shown in the chart, China, the US, and Europe will collectively account for 86% of global new storage installations in 2025, continuing to lead global demand growth. Meanwhile, emerging markets such as Asia, Africa, and Latin America are expected to accelerate deployment, driven by energy transition policies, power shortages, and rising electricity prices. Moving on, let's explore how energy storage is being applied across different scenarios. Let's see utility scale part first. Utility scale storage remains the dominant segment, with estimated installations reaching 66 gigawatt, 181 gigawatt hours in 2025, accounting for 84% of total capacity. China and the US will continue to lead this market, with Europe, India, and the Middle East beginning to scale up. Countries are adopting different strategies to advance utility-scale storage. For example, China is shifting from policy-driven to market-driven deployment, supported by power market liberalization. And as for the US leverages market arbitrage opportunities and tax incentives. Europe relies on market reform and ancillary services, while India has proposed mandatory storage allocation policies. Then we move to the residential storage. Residential storage remains the second largest segment. Installed demand in 2025 is expected to slightly rise compared to 2024, though its share will slightly decline. We are starting to see divergence across regional markets. In parts of Europe, subsidies are being phased out, yet high electricity and gas prices continue to create strong installation demand, resulting in moderate growth. The US and emerging markets across Asia, Africa, and Latin America are likely to see growth, supported by high electricity costs and unreliable power supply. The last one is commercial industrial storage. Commercial industrial storage currently accounts for a smaller share. In China, time of use pricing encourages commercial industrial deployment. In regions like Guangdong and Zhejiang province, we can see great results of Liangchong Liangfang, which offers attractive return on investment and drives rapid growth in installed energy storage capacity. Liangchong Liangfang here means energy storage can achieve higher arbitrage profits by performing 2 daily charge and discharge cycles, with generating a price spread of over 1.2 RMB kWh. In contrast, commercial industrial storage is still in its early stages in the overseas market due to relatively low electricity prices in Europe and the US, along with limited policy incentives. Emerging markets are still in the pilot and demonstration phase. Obviously, unlocking overseas commercial, industrial potential will depend on diversified and viable business models. After outlining the global energy storage installation landscape, let's move to the 2025 outlook across major regions. We can start from the Asia-Pacific area, APAC. We project energy storage installations in the APAC region to reach 128 gigawatt hours in 2025, reflecting a 33% year-on-year growth. Although demand for energy storage remains robust, the growth rate is showing signs of deceleration. China and Australia will continue to dominate storage deployments in the region, while emerging markets are beginning to tap into growing demand for energy storage. In 2025, China is anticipated to account for 89% of APAC's total storage installations, followed by Australia at 5%. In China, renewables plus storage is shifting from policy-driven to market-driven mechanisms, with installations expected to continue an upward trend. In Australia, a solid project pipeline and generous state-level subsidies will support further deployment. Meanwhile, emerging markets such as Japan, India, and Southeast Asia are poised to see a gradual increase in energy storage demand. Let's shift focus to the applications again. In 2025, we expect the APAC region to reach 111 gigawatt hours of utility-scale storage, up 29% year-over-year, accounting for 87% of total installations. This segment will be led by China and Australia. And then, 14.6 gigawatt hours of commercial and industrial storage, representing 11% of the market, with 74% year-over-year growth, mainly driven by China's rapid expansion. Next, we can analyze the country-level market drivers in APAC together. First, China. In terms of utility scale, that is dominated by utility-scale energy storage, accounting for nearly 90% of installations. Although the removal of mandatory storage policies might temporarily suppress demand, installations will likely remain strong in 2025. But long-term growth will increasingly be market-driven. Commercial industrial storage penetration is gradually increasing due to the implementation of time-of-use electricity pricing. Residential storage, or home storage, less economically attractive due to low residential electricity prices, resulting in smaller-scale deployments. Then, let's see Australia market. Australia is primarily focused on utility-scale storage. The country is currently in a transitional phase where dispatchable coal-fired generation is being phased out, and clearly, energy storage is expected to fill the gap. Strong state subsidies are driving rapid growth in this segment. As for its residential storage, driven by retrofit storage for existing PV systems and the deployment of new PV J1 storage systems. Next, we can move to Japan. Japan is dominated by distributed storage. Key drivers for its energy storage include emergency backup needs due to natural disasters and power rationing policies, high residential electricity prices, declining feed-in tariff incentives, ongoing residential subsidy programs. Its utility-scale storage is supported by the maturing multi-market trading system, including day-ahead, intraday, and forward markets. In the future, Japan may ease restrictions on the proportion of domestically produced components required in energy storage systems, potentially unlocking additional storage demand. And then it is India. A draft policy mandating energy storage deployment is expected to have limited short-term impact as energy storage remains in the early stages of development with modest installation volumes. Early deployments are mainly in small-scale commercial, industrial applications. And government-led initiatives, subsidies, and tendering mechanisms are expected to drive growth in utility-scale renewable plus storage and grid-side storage projects, positioning them as the mainstay of India's energy storage deployment. So finally, we can see the Southeast Asia area as a whole now. The region is poised for rapid storage growth over the next 3 to 5 years. On one hand, the region faces challenges such as limited fossil fuel resources, power supply deficits, and high electricity costs. On the other hand, the large number of islands and off-grid power systems, combined with weak power infrastructure, is creating strong demand for both residential and utility-scale storage. Meanwhile, countries like Malaysia, the Philippines, and Indonesia are all promoting the development of local renewables through various policies and programs. Now, let's take a closer look at the European market. We project that Europe's energy storage installations will reach 26 gigawatt hours in 2025, representing a year-on-year increase of 26%. Notably, Germany, Italy, and the UK will together account for 58% of the total capacity, while the share of traditionally dominant countries continues to decline, and energy storage demand in other European countries such as Spain, Poland, and Ireland is beginning to ramp up. Keep the whole picture in mind. We can look at Europe market by application scenarios again. In 2025, Europe's residential storage segment is expected to experience a short-term correction, while utility-scale storage is set for significant growth. Specifically, utility-scale storage installations in Europe are forecasted to reach 16 gigawatt hours in 2025, marking a 49% increase year-on-year and accounting for 60% of total deployment, surpassing the residential segment, which is 40%, for the first time. As subsidies for residential storage gradually phase out across European countries, the market is undergoing a shift from residential-led to utility-led energy storage development. And when it comes to residential storage, this primary driver is transitioning from government subsidies to electricity cost savings and energy security, particularly under the backdrop of persistently high energy prices. And then the commercial, industrial storage. While still relatively small in scale and concentrated in a few industrialized countries, it primarily relies on arbitrage from peak valley electricity price differentials. As commercial industrial systems increasingly participate in grid services, the segment is poised for accelerated growth. The last one is utility-scale storage. With the rising share of renewable energy in national power mixes, the demand for grid flexibility and stability is increasing among European countries. Coupled with the ongoing development of market-based revenue mechanisms, utility-scale storage is expected to unlock significant deployment potential. The next part of our discussion will focus on analyzing the key market drivers behind energy storage deployment in major European countries. See Germany first. Residential storage. Starting in 2025, state-level subsidies are set to conclude, which may lead to a decline in demand that had previously been heavily incentive-driven. Currently, households are increasingly installing energy storage systems based on the economic benefits of coupling PV with storage, rather than relying solely on subsidies. Commercial, industrial storage. The current market size remains limited due to the lack of diversified revenue streams. However, as access to ancillary service markets improves and business models mature, the penetration of commercial industrial storage is expected to increase steadily. Utility-scale storage. The primary drivers are grid needs and market-based revenue mechanisms. With the diversification of profit models, utility-scale storage deployment in Germany is expected to begin gaining real momentum. Then we can move to Spain. The majority of energy storage projects awarded through the 2023 national auction are scheduled to come online in 2025, potentially triggering a wave of grid connections for utility-scale storage. Currently, large-scale storage systems in Spain can only participate in the wholesale electricity market, with limited revenue from ancillary services and no active capacity market. The Spanish government plans to relaunch a new capacity market by 2025. If officially implemented, this could result in gigawatt-scale installations by 2028. Then go to Italy. Utility-scale storage is expected to take over from residential storage as the key growth driver. Due to the mismatch between solar capacity in the south and hydropower in the north, the grid urgently requires storage solutions to manage regional imbalances and reduce curtailment of solar and wind generation. The establishment of the MAX mechanism is also expected to support sustained growth in Italy's utility-scale storage sector. Last, we can have a look at United Kingdom. It would be better to break it down to front-of-the-meter market and behind-the-meter market. First, front-of-the-meter storage. With coal being phased out and long lead times for nuclear power development, renewables like wind and solar must fill the resulting power supply gap, highlighting the need for storage to provide grid flexibility. At the same time, the growing diversity of revenue streams, like balancing services, wholesale arbitrage, capacity markets, is creating more stable income for storage projects. Then, it's behind-the-meter storage. Residential. The combination of a sharp drop in PV export tariffs and a VAT exemption on residential PV plus storage systems, which is previously taxed at 20%, has significantly improved the economic viability of home energy storage. Commercial, industrial. Though the market is still relatively small, volatile industrial electricity prices and power quality demands from energy-intensive businesses are supporting gradual uptake. Next, let's look at the Americas market. We project that installed energy storage capacity in the Americas will reach 54 gigawatt-hours in 2025, representing a 37% year-on-year increase. The region's growth continues to be driven primarily by the United States, with Chile and Canada contributing notable capacity additions. In 2025, the US will account for 87% of the total installed energy storage capacity, followed by Chile at 7% and Canada at 4%. The urgency of deploying energy storage is significantly higher in North America than in Latin America, where limited land availability and weak regulatory frameworks still hinder large-scale development. In addition, storage projects in North America tend to be more commercially attractive than Latin America. As such, Latin America still needs time to achieve accelerated growth in energy storage demand. Then let's move to application segments. In 2025, utility-scale storage in the Americas is expected to reach 48 gigawatt-hours, a 37% year-on-year increase, and will account for 88% of total deployments. Commercial industrial storage is projected at 1.6 7 gigawatt hours, Yaoing, 61% YoY, 3% share, while residential storage is expected to reach 4.6 gigawatt hours, Yaoing 28%, YoY 9% share. We can see that the US energy storage market is driven by both utility scale and residential segments, while Chile and Canada focus more on utility scale and commercial industrial storage. Specifically, key drivers for utility scale storage in the Americas include fragmented grid infrastructure and the increasing penetration of variable renewable energy such as solar and wind, unlocking demand for storage's flexible services and backup power solutions. In contrast, residential and commercial industrial storage deployments are progressing more slowly due to a lack of direct subsidies and longer payback periods. Let's now analyze the key drivers in major countries across the Americas. First, United States. Despite headwinds such as the freeze on incentives and increased tariffs on storage battery imports, the US storage market shows resilience thanks to a strong project pipeline and the potential for interest rate cuts under Trump's monetary policy stance. Then we can look at Chile. Growing grid pressure and regional mismatches in energy supply and demand present significant opportunities for energy storage. Backed by a favorable policy mix including a capacity mechanism, spot market reforms, and renewable energy auctions, Chile's solar plus storage segment is poised for continued high growth in 2025. Next, we can move to Canada. The market is centered around utility scale and commercial industrial storage. Key drivers include anticipated interest rate cuts and the 30% ITC. In addition, government procurement of energy storage projects offers long-term support for capacity growth. Last one, Brazil. The energy storage market is still in its infancy in this country, with relatively small-scale deployments. Lack of regulatory and incentive frameworks continues to limit the financial attractiveness of energy storage projects. In the short term, growth will mainly come from distributed solar plus storage systems. However, the government is moving to integrate energy storage into capacity auctions, which could pave the way for future utility-scale deployments. And that's all about America market. Next, we can move to Middle East and Africa markets. Start from market outlook and deployment drivers. We project installed energy storage capacity in the MEA to reach 8.9 gigawatt hours in 2025, marking a 195% year-on-year increase. In the Middle East, demand is primarily driven by Saudi Arabia, where long-term energy storage deployment is expected to accelerate under the country's energy transition and green hydrogen strategy. In Africa, the market is currently led by South Africa. While the overall scale of energy storage across the continent remains limited, growing issues such as electricity shortages and rising electricity prices are prompting countries like Egypt, Morocco, and Nigeria to make clear renewable energy development plans. Therefore, their development in energy storage may drive long-term storage demand growth. And we can break it down by using application scenarios agent. First, utility scale storage. It is expected to reach 7.5 gigawatt hours in 2025 in capacity, a 258% YoY increase, accounting for 85% of total installations. Also, its growth will be concentrated in Saudi Arabia and South Africa. Then, behind-the-meter storage installations. Installations are expected to reach 1.4 gigawatt hours, a 50% YoY increase, accounting for 15% of the total market. Although smaller in scale, this segment is gaining traction. In the Middle East, utility-scale energy storage projects are primarily driven by government tenders, with international companies and local developers being the main participants. Chinese companies tend to focus on equipment supply and subcontracting partnerships. In Africa, the energy storage market is largely off-grid, with distributed solar solutions being used to ensure power security in remote areas. At the same time, large grid-connected storage projects are beginning to emerge. In this part, we can talk about market dynamics and key country insights in the MEA. Let's see Saudi Arabia first. The country's energy storage boom is driven by its energy transition goals. The Ministry of Energy has announced a 24 gigawatt hours energy storage tender program for 2024-2025, including 18.6 gigawatt hours of utility-scale storage tenders already launched in 2024. These tenders represent a significant project pipeline that will underpin Saudi Arabia's large-scale energy storage growth. Additionally, green hydrogen production projects are expected to generate substantial demand for energy storage capacity. And South Africa. The market focuses on both utility-scale and residential energy storage. As for residential storage, ongoing blackouts and anticipated electricity price hikes continue to drive demand from users for greater energy independence. And utility-scale storage, it is largely dependent on government-led and utility-driven tenders. Tender projects in earlier rounds are expected to transition into installed energy storage capacity in 2025, supporting substantial market growth. Finally, let's wrap up with a few key takeaways. TrendForce forecasts that global new energy storage installations will reach 82 gigawatt, 216 gigawatt hours in 2025, representing a year-on-year growth of 28% and 36%, respectively. While the global energy storage market continues to expand rapidly, the pace of growth is gradually moderating. The average storage duration is expected to reach approximately 2.6 hours, indicating a steady upward trend. By countries, China, the United States, and Europe will account for 86% of new global energy storage installations, continuing to lead global demand. At the same time, emerging markets across Asia, Africa, and Latin America are expected to accelerate deployment, driven by energy transition goals, power shortages, and rising electricity costs, leading to a larger share of the global market. Then, as for applications, utility-scale storage remains the dominant form of new installations globally. China and the US are the largest utility-scale markets, while Europe, India, and the Middle East are gradually scaling up. Each region is advancing through different market mechanisms. For example, in China, the shift is moving from policy-driven growth to market-driven expansion, supported by ongoing power market reforms. In the US, installations are incentivized by market price differentials and tax credits. Europe is advancing through power market restructuring and enhanced ancillary service frameworks. India is preparing for future demand through the introduction of a mandatory storage policy draft. Together, these diverse approaches are driving global utility-scale deployment. In terms of residential energy storage, it ranks as the second largest segment by installation capacity. Demand in 2025 is expected to rise slightly compared to 2024, but its share of the overall market may decline marginally, with regional divergence in capacity. The European market is likely to experience a moderate correction, while emerging markets in Asia, Africa, and Latin America are beginning to see initial uptake. Last, commercial and industrial storage. It currently represents a relatively small base. China is expected to lead global commercial industrial storage growth over the next 2 years, while the overseas market still holds untapped potential, with strong potential in the medium to long term. Before we end, let's quickly go over regional highlights. Asia Pacific, dominated by China and Australia. Europe, Germany, Italy, and the UK remain major contributors, though their share is gradually declining as demand picks up in other European countries. Americas. The US leads with both utility scale and residential storage, while Canada and Chile are growing in utility scale and commercial industrial storage. Middle East and Africa. The focus remains on Saudi Arabia and South Africa,